Good evening, good Sunday evening to you. Thank you for joining us once again. This is Sunday, February the 11th. Oh my gosh. It was the other day, it was just Christmas, it was just the New Year's, and a lot of you have made resolutions. And I am wondering, how have you been doing with those resolutions? We are in the sixth week of the resolution, so I hope that some of you have kept up with it and some of you have even modified it. So I want to thank you for joining us. This is Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America, one community at a time. And I have joined with SOFA to bring that to this community. So thank you for joining us. Remember, we are now in the studio. You can give us a call with any questions or concerns, anything you'd like to share with us. 954-792-1170, 954-792-1170. We're on the air every Sunday night from 9 to 10, but you have 24/7 access to us. We have a website. You can check us out on the website, financialliteracy.info, financialliteracy.info. And from the website, you can take you directly to the media pages. We have social media pages. We have Facebook, we have LinkedIn, we have Twitter, and we have a YouTube channel. Please never forget that, because if you miss any of the programs, we have been coming to you for this is our second year. We have been coming to you from last January 1st, 2017, and we continue to bring this education to you. We have gotten some very good feedback, so we thank you. We thank you for our regular listeners. We thank you who have just joined us. So we hope to serve you by providing education in the matter of finance. So it is Sunday school. So I would encourage you, we're going to share some stuff with you tonight. I would encourage you to get your pens, get your paper. What we're going to talk about tonight, we have been reminding you about tax planning the past couple of weeks, but tonight we're going to talk specifically about the new tax law. There are a lot of confusion out there, and we are hoping to clear up some of those confusion tonight. There's not much we can do for 2017. 2017 is already gone. Basically, what we're going to be doing for 2017 is tax filing. We cannot do any tax planning for 2017. In fact, there's a couple we can do. We can do a couple, not much. One can still, if someone has some kind of a business, they can still do an IRA. Yeah, you may not have heard where someone might have told you that, oh, you cannot do any IRA anymore. That's mostly true, but not necessarily true. There's still one IRA that a business owner can do. SEP IRA. You can still do a SEP IRA, which can help reduce a tax liability if you have a business or an independent contractor, stuff like that. So basically, you can seek financial guidance on that. So there's one thing you can do there. Outside of that, there is one other thing, but this is mostly for business now, in the sense that regarding depreciation, if some assets were placed in the latter part of 2017, and it can get very complex. So if that is your situation where you may have placed some assets in 2017, late 2017, that's between December 15th and December 31st, there may be some stuff that you can benefit from the 2018 law that can go back to those last 16 days of 2017. So outside of that, there's not much you can do for 2017. You're doing filing. 2017, you're now doing tax filing. So I want to encourage you, as you do your tax filing, You can look at your situation, whereas if your situation was not what you had expected, you had to pay, or your refund was too low or something like that, then one of the things I encourage you to do is to do tax planning. And sometimes we get caught up into believing that, oh, well, I don't have enough money, so tax planning is not for me. That's not true. Tax planning is for everyone. Everyone, because there may be things that you can do different that you are not doing. So if you just go and just do straight tax filing, tax filing, tax filing, you may be missing out on some opportunities. Okay, so I just want to remind you of that. So remember, we are in the studio, 954-792-1170, 954-792-1170. This is Hubert McIntosh with financial literacy. Remember our goal at all times, and I have to remind you, our goal at all times is to help each and every one of you to develop a personal economic model. And that being said, personal economic model, the phrase speaks for itself in a lot of way, in that the model for you may be different or is different from someone else. It's very rare that two people gonna have the same kind of model, in the sense that we all live different lifestyles. Some people may love to go out to dinner every other day. Some people go out once a week. Some people go to the movies. Some people get Netflix. Some people watch on demand. So it's all, so that's why it's all shows that we live different lifestyles. So the key part of it is that we establish a personal economic model to mirror the lifestyle that we live. And in that sense, one of the key thing we have to look at, we all wrestle. We all wrestle. Every one of us wrestle with two different types of lifestyle, where we're looking at a current lifestyle versus a future lifestyle. Because if one decides that they're just going to focus on their current lifestyle, I can guarantee you it's going to affect the future lifestyle. It's going to affect the future. So it's based on what one's belief is, so that you can identify it. Okay, can you balance your lifestyle? I think that would be most appropriate, but it comes down to each individual, where some people will say, well, I want to live life now because I don't know what the future will be. And that's all well and good that someone can say that. But what about the consideration? Okay, you live life to the fullest now, but you don't make any preparation for future. That could be a sad situation. We're not gonna go much into that. We just want to bring that awareness to you. And one of the impediment, or probably the main impediment outside of spending loosely, the main impediment in as we develop our personal economic model is taxes. It's taxes. Almost everything we do in life regarding finance, the question that we should be asking ourselves, what's the tax? If we focus on asking ourselves, what's the tax, we can save ourselves so many headaches. But keep that in mind, whether it's a small purchase, which is a large purchase, whether it's refinancing a home, whether it's buying a home, buying a car, whatever it is, ask that question. And whoever is guiding you, let them help you with that question. What's the tax? What's the tax? Tax is an impediment. It's an impediment. So it's some of the questions that we even have with investing. Like, for instance, we're going to invest in 401k and IRA. One of the things we have to ask ourselves is, what's the tax? Because what you'll have to be looking at, all right, tax now or tax future. You're not going to escape the tax. So I'm not going to mislead you and tell you you're going to escape the tax. It's either you're going to pay the tax now or you're going to postpone the tax. So with that being said, it's a direct segue into the new tax law that was just passed on December 20th. Sometimes it might even be a little bit confusing because it says the 2017 Job Tax on and Jobs Act 2017. So when you hear the term 2017 Tax Act, you may think it's related to 2017. No, the 2017 simply means that it was passed in 2017, but it's for the tax year 2018. So I want to clear that up because a lot of times people will even call our tax office and they'll ask that question and they'll say, yeah, but we the tax law says it's a 2017 tax law. No, it was passed in 2017, and to be exact, December 20th, 2017. That's when it was passed. But the law is for 2018. So that's what we're going to talk about. So what are some of the main concerns? I know you guys are hearing in the news and you hear conflicting reports. You hear conflicting reports depending on who you're listening to, where one side will say, oh, it was a great law. Another side says, no, it's not. It's only for a certain type of people. And you hear different things, blah, 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 blah. The bottom line, every tax law, I don't care when, you could go back from 2017, you go back to 2010, 2006, 2001, 1986, 1982. All of these are years of different tax act. You go back to 1933 when Social Security was introduced. You go back to 1965 when Medicare was introduced. Every law, and it's not even just tax law, gonna benefit some people and it's gonna be disadvantage to some. There's no law that can benefit everybody. So let's deal with that elephant right in the room. It cannot benefit everybody. Some people it's gonna affect negatively. Some people it's gonna be positive. So just keep that in mind, okay? So we're going to clear that up. No law can benefit everybody positively. So we're going to talk about the law itself. I'm not going to give up. It's not opinion. I'm just going to based on the facts that there is. Not necessarily my opinion, because then if it's my opinion, then it loses a part of the educational flavor. Because if it's education that we are providing you, then opinion has to be limited, because then the facts can be distorted. Okay? So this is Hubert McIntosh, 954-792-1170, 954-792-1170. We're talking about the new tax reform bill. So what's the main thing? There are a bunch of things that happened, but we're going to focus on the things that affect most of you. Right. So one of the key things that has changed is the tax rate. So let's get an understanding of the tax rate. The tax rate, the lowest tax rate is 10%. That was always. So that still remains. 10% is the lowest tax rate. The next tax rate from 10% was 15%. That has dropped to 12%. So I hope you have your pen and your paper and you're taking notes, and you're going to find and see where you fit in. So the second tax rate is 12%. That dropped from 15. The next one is 22%, which dropped from 25. The next one, 24, was previously 28. Next one, 32. Was previously 33. The next one is 35. 35 stays the same. And the highest tax rate we have in America now is 37%. Previously, it was 39.6%. So those numbers, yes, you hear the numbers, you hear the tax rate, and sometimes we focus so much on the tax rate that we miss the more important point other than the tax rate. Sometimes people think the tax rate is the most important part, but no. The threshold, or another word you can use is the brackets. The brackets. So I'm going to share that with you in the sense that you hear 10%, you hear 12, you hear 22, 28. But the bracket in a lot of cases are more important than the rate. So the first tax rate, 10%, the lowest tax rate, that is for income up to $9,525. So if your taxable income now, not your gross income, and that I want to clear that up because sometimes that is a little bit confusing. The tax rate is measured by your taxable income. So what's the difference? You have gross income. It's like where someone may say, well, okay, I make $500 per week. The $500 that person makes per week is considered gross income. But out of that gross income of $500, there has to be FICA tax or Social Security tax, which is 6.2%. That's a given. 6.2% will have to be deducted from that 500. Then you have the Medicare deduction. Medicare deduction is 1.45%. I told you I'm going to be giving you numbers tonight, so that's why I want you to have your pen and paper, because tonight it's not just a listening to the concept. You have to put numbers on the paper. Okay? So the next one, we talk about Social Security deduction, 6.2%. Medicare deduction, 1.45. So that together is 7.65. And then you have federal withholding. And this is another one that sometimes get confusing. What's federal withholding? Federal withholding is what you call income tax. Remember that. Income tax is different from FICA tax and Medicare tax. Because sometimes people will in the office and they're talking about their what their refund is, and some people think that it's possible to get a refund of the Social Security and the Medicare tax. That's not so. You cannot get a refund for Social Security and Medicare tax. You can get a refund for the federal withholding tax, which another word for that is income tax. So basically, breaking it down further, it's the tax you pay on the money you earn. That's why it's called income tax. So then you may say to me, but Hubert, then what is FICA? What is Social Security tax? What is Medicare tax? What that is considered is the contribution. It's considered a contribution. The Social Security deduction is considered a contribution that you are making towards Social Security. The Medicare deduction is a contribution that you're making towards Medicare. And one of the questions you may ask yourself, you may say, but Hubert, what if I don't want to make a contribution? Well, I'm sorry to tell you, if you don't want to make a contribution, you're living in the wrong country. You know, that's just as straight as I can give it to you, because you don't get a choice whether you're going to contribute to Social Security or contribute to Medicare. That's mandatory. The government says once you live in America, in the United States of America and you have earned income, you are going to pay this. It's just it's just a law. It's just a law that none of us has a choice about. So I just want to remind you of that because sometimes people think that they can get a refund on that. So one other thing also we're finding that's a little bit confusing in the sense that sometimes some of you, you know yourself, as independent contractors, you choose not, you limit your income because you want to pay less Social Security and you want to pay less Medicare. Sometimes that's not the best thing to do. And I'll explain a part of it to you why. Because when you get to a later stage in life, you will have to deal with Social Security. So I understand that we have a caller on the line. So we're going to go to that caller right now. Caller, you're on the line.
Yes, sir. I
Yes,
got a
sir.
question.
Thank you for calling. Thank you.
Yeah, if you are disabled,
Yes.
do you got to pay taxes on that money?
Very, 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 very good question. The disability, it depends. It depends. Because here are works. Say, for instance, if it was disability income, you may have a plan and you're getting disability income combined with other income, you may have to pay tax on it. So it's not a one answer that says, okay, you don't have to pay tax on the disability or you have to pay tax on it. It depends.
Okay, all right. Listen, I got I get a retirement check also,
Yes.
which it's nothing much. Now I'm blind,
Yes.
and I think they allow us to make up to $1,600 a month.
Right.
So I'm below the $1,600 a month.
Okay. Okay. Well, in a case like that, then it will not be taxable. So,
Okay.
so you have the answer there. So that's why some of the depends I'm talking about because sometimes they allow you to make certain other amounts, and if you make over that threshold, you hear me using the word threshold. If you make over that threshold, then part of that income will be taxable. That's a great question. So
Okay.
so I think you do have the answer there. So that's where the depends comes in. It depends on how much is your other income. Because here's another way you can look at it.
Uh-huh.
Social Security. Like for instance, we were just talking about Social Security. Someone can get Social Security income, right? And normally at age 65 or if disabled. So look at it that way. You Social Security you can get age 65 or disabled. So with just the disability income of itself like that, then there's no tax on it, just
All
like
right.
you said. But the same way as with Social Security, if you earn a certain amount, then you're going to find part of the disability income, the Social Security income is taxable. And it's the same way with the disability income. But straight and straight, if that's the only income you have and you're getting disability income from the government, that's not going to be taxable.
All right. I got one more question too,
Okay. So,
and I really appreciate that because I've been battling with that.
okay.
Because I went to a taxman once, and I'm also a pastor.
Uh-huh.
Well, he wants to do taxes on me and the church too,
Uh-huh.
and charge me a fee. But yet I didn't have to pay back nothing.
Okay.
So I said, no, this, if I'm disabled, I should not have to pay tax on that disabled money again.
No, no.
So
And
why?
mhm.
Uh,
Go ahead.
So I'm wondering why he would want to charge me to do paperwork when he can come out and charge and let me know front that it's not like just like what you explained it to me.
Oh, all right. One answer for that, and I don't know if that's a particular case. Sometimes you may not have sometimes you may not have to owe money, but sometimes you have to file the taxes to prove that you don't owe the money. So I don't know if that was the reason where he was coming from, because sometimes you still have to file the
But,
taxes.
but remember also, that's what I tried to show him. Every year, the government send me a statement
Yes.
how much money I received from them.
Yes.
So I got my record.
Okay. Okay.
So what I'm trying to say that when I proved that to him, he kind of backed down a little because I got my record and turned away my record.
Yes, yes. Well, that was wise of you. That's great wisdom there. And it's just like anything else in life. You're gonna have people that's gonna prey on your innocence and
Eh,
your lack of education in certain things. And that's the reason that we bring this show, to bring financial literacy to this community, because sometimes people are being assessed or charged things because they just don't know. And what we are hoping to do in this community is to clarify some of those things so that you guys have the education. So I want to thank you. Thank you for being a listener. Thank you for calling,
Thank you very much.
and continue listening and keep us in your prayers.
Thanks. Bye.
Have a good one. So we want to thank that caller and what he was speaking about, and that is part of where sometimes there's a little bit of confusion with disability income, and likewise with social security income, where sometimes people were told that social security is never taxed, but that's not true. It depends. Social security can be taxed based on your other income that you're making. But if the only income you have is the social security, then it will never be taxed. So I just want you to be aware of that. So with that said, I'll have to step away, pay some bills, and come back. So stick and stay with us. We will be right back. Welcome back. Welcome back. Thank you for sticking and staying with us. So on the other side of the break, what we were talking about, we were responding to the caller asking about if disability income is taxable. So one of those things, and it's one of those things whereas sometimes there are things that are not commonly known. So sometimes there's some confusion out there. And what can even make matters worse, like the pastor mentioned that he went to someone and his income was disability income, but yet still a tax preparer wanted to file his taxes for him. And then when he called him out on it, then the person backed off. So that's going to happen. And, unfortunately, that's going to happen. And that's why I encourage each of you to basically seek professional opinion. And in a lot of cases, get more than one opinion. Okay? So prior to the call, we were talking about why certain things are certain ways. So with the social security and the Medicare question regarding the deduction from the wages. It's critical in the sense sometimes initially you may not see the benefit, but what happened, that benefit can catch up with you in the long run, because with Social Security, to be eligible for Medicare in this country, you have to have worked basically at least 10 years. You have to have 40 credits in the system. And how do you accumulate 40 credits is that one quarter every 3 months is one credit. So in any given year, there are four credits because there are 4 quarters. And since you need 40 quarters, then you need 10 years, hence the 40 quarters. So that's a standard way. But keep in mind, Social Security is so complex that there are so many ways you can take Social Security. And I'll even introduce you to one, even though that's not the topic we're talking to. But since the pastor called, I want to mention that this past week we were helping a client. Here's a situation. The client is 70 years old, right? He has never worked in America. Never worked in America, but he's an American citizen, but he has never worked. So here you have this person doesn't qualify for Social Security because they never worked in America. But guess what? He's married to someone who has worked 18 years in America. Yeah. So guess what happens now? One of the benefit of Social Security is that a spouse can get 50% of what their spouse would get. So that's a little bit more complex, but I just want to tell you that just because you don't qualify one way, it doesn't mean that you're not qualified in every way. That's why I continually encourage you to seek professional advice, because here's this man never worked in America, but he's eligible to claim 50% of his wife's Social Security because she has worked 18 years. Okay? I understand we have another caller, so we're going to go straight to that caller. Caller, you're on the line.
Evening.
Good evening.
Yes. Is there a poverty guideline where you could file if you don't make, over the limit?
Great question. Great question. And that was something that we were going to talk about earlier, later. But since you call, I will just address it right now. For a single person, remember we're talking about 2018 now. Are you talking about 2018 or 2017?
2018.
All right,
2017. I'm sorry.
All right, 2017. 2017. If you make less than, because you have 6,350, which is a personal 6,350 is what's called a standard deduction. Okay. And then you have something 4,050, which is called a personal exemption. Okay. So what that means, if you total both those, the 6,350 and the 4,050, that's 10,400. If you make less than 10,400, you don't have to file any taxes. Okay? You don't have to file any taxes. But let me point out something that sometimes some of us are making the mistake. Because if you just take those facts and you run with it and says, well, I didn't make that, so I'm not going to file. But maybe you made $3,000 or $4,000 extra, but that's not reported. And you says, well, since only 10,000, less than 10,400 was reported, then I don't have to file. But again, guess what's going to happen November 1st? What's the situation you're going to run in? November 1st now, you're now looking to apply for health care benefits. Okay. Do you see where I'm coming? You're going to apply for health care benefits, and for you to get premium tax credits and certain health care benefit, you have to make more than 12,000. So you see where the catch-22 can come? So you don't have to file if you make less than 10,400. But if you make less than 12,000, you're not going to be able to get premium tax credit under the Affordable Care Act.
Okay.
But then again, that in itself doesn't disqualify you, because if you don't make that, then you might be eligible for Medicaid.
Oh.
You may be eligible for insurance through Medicaid. So a lot of these things, they are not just one sentence and one word answer. So I thank you for calling. That's a great question. Did that address your question?
Yes.
Okay.
Quite clearly.
All right. Thank you so much. Thank you for being a listener, and thank you for calling. Okay. Have a great night, and continue listening and provide us with your feedback. Remember, you can go to Facebook and you can like our page. Liking our page will also help others to find us. Okay. So
One more question.
yes.
I also was reading the Miami Herald,
Yes.
and I saw here where you could, all over, they have 40 sites over the country where you could file for free.
You can do what?
File your tax for free. It's called Vita.
Oh, yes. There are a lot of places you can file your taxes for free. Even the IRS.gov. You can go to IRS.gov. You can file your tax for free. You can go to TurboTax.com and you can file your taxes. If your tax returns are simple, there are a lot of places you can file your taxes for free. So what you can do is Google and just put in free tax filing, and many places will come up. You have some H&R Block that you will get your tax filing for free. TurboTax.com, you'll get your tax filing for free. Bunch of sites. And it's because if your tax return is simple. If your tax return is not simple now, then that's going to be a different story. So what's a simple tax return? A simple tax return is one person getting an income and just filing their taxes. That's a simple tax return.
Okay.
But anytime you have anything else, it's not simple anymore. If you have a child, if you have children, if you own a home, these different things, if your situation has anything additional, then that's not considered a simple tax return, okay?
Okay.
All right. Thanks again for calling. We appreciate your call.
You're welcome. Have a good night.
Thank you. So as that caller was asking again, you see, whereas and the calls, and these calls are coming in tonight, and you would think that I am setting up these callers, because this lady's question was so great. Because here's the question she asked: what's the amount that she doesn't have to file taxes? And I went through it with her. For a single person, if they make less than 10,400, they don't have to file the taxes. So, but every time you solve one thing, you have to think of what it may affect, the impact. Because if you don't file the taxes, then what happened when you know gonna apply for your premium tax credit? Because they're gonna ask you, did you file a tax return? So the question is, okay, no. Why didn't you? Oh, because I made less than 10,400. Well, you're not going to be able to get the premium tax credit, because the poverty level, the range for the poverty level starts at $12,000 in the United States. And for a single person, they can get a premium tax credit between 12,000 and 48,000. The 48,000 is up to 4 times the poverty level. So those are the factors. So you may think you're solving it one way, but you're running into another problem. It's the same way I mentioned, to where someone may think, well, since the government doesn't know, I am an individual, I am an independent contractor, I am making money by cash, so I am not going to report any tax. So you work like that for 30, 40 years. You didn't put anything into the system. You get to age 65, and then you don't have Medicare. You don't have Social Security. So, how do you deal with that? Yes, you can get away with not having Social Security if you have other sources of income. But let's talk about Medicare. You're not eligible for Medicare, and you may, wow, what if you need to go to the doctor? There's this misconception out there that says, okay, well, if I am sick, I can just go to the hospital because if it's an emergency, they have to treat me. Yes, and here's another thing again. Here's these catch-22 we're dealing with. Yes, they have to treat you for that medical situation, that emergency situation that you go there for. All right? But do you realize that every emergency has a follow-up care? Where are you going to get the follow-up care? The emergency room is not going to give you follow-up care. Yes, they're going to patch you up. They're going to send you off. And then you're going to say, well, I can go to the clinic. Okay, all right, you're going to go to the clinic. You're going to go through all kind of challenges. You're going to go to the clinic 8 o'clock in the morning. At 6 o'clock in the evening, you're still not being cared for. These are the factors that you have to think of. So it's not a one side. You think you're getting away here, or you think you're solving here, but that it's like plumbing. Plumbing is an interesting thing. A lot of times in plumbing, you may plug one thing, or you think you fix a particular leak, but based on how you fix it, it may create another leak. You understand? So here's a question that we get. And oh my gosh, this question is so awesome. A caller call. It's just in line what we're talking about. The caller question: sick and did not put anything in the system. Can you get anything from the government? Do you see what happened? I just answered that question, right? But here's the thing now. And remember now, I will answer things. And yes, there are still exceptions. Because this caller asked a question about sick. So here's the thing. Sick and disabled are two different things. So you can be sick, but if you were not pronounced disabled, then it's a different situation. And for those of you who are aware of disability, claiming disability is not a 1, 2, 3. They go through all kind of investigation, and they have to verify how did this disability come about and different things. But when it's a disability, there are benefits that one can get just by being a resident or a citizen of the United States. Sometimes you may not have put anything in the system, but based on your disability, you can get. So caller, yes, there are situations where you'll be able to get something from the government. And a lot of times, without trying to guess, because if it's not a disability, you can always call Medicare.gov. And Medicare, you can go on Medicare.gov and you can call 1-800-Medicare. And when you call that number, 1-800-Medicare, they will guide you. They will tell you. You tell them your situation and they'll tell you what are your options. So don't just take it that someone may say to you, oh, you're not eligible. Never take that stance. Contact Medicare.gov. And they will guide you there. Because sometimes in contacting Medicare.gov, Medicare, you cannot get anything from Medicare, but then Medicare has a link to Medicaid, and they will help you in such a situation where you will know. Wow. I've said it to you guys that the fastest hour of the week. I don't know why it is. Sunday nights, 9 to 10. Can you believe we only have 10 minutes left and I have only spoken about one tax bracket? Oh my gosh. Let's see if we can get you up to speed on that. So the 10% tax bracket, and as I said, we're in the studio, 954-792-1170, 954-792-1170. This is Hubert McIntosh, your CPA and a member of SOFA. SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America, one community at a time. And I've joined SOFA to bring it to this community, broadcasting to you on Waves 1170. So, and also with Waves 1170, please remember, you don't have to just have the dial. You don't just have to have the in your car and try to find Wave 1170. There is an app. You can get the app on your phone. Whether you have an Android phone or an iOS, there's an app for Waves 1170. And also on the internet, you go on waves1170am.com, then you can link there. If you also go to financialliteracy.info, we have a link on our site that links directly to Waves 1170. So you have many ways. And also now, I don't know if you are aware of it, Waves 1170 is now streaming on FM 107.9. Yes, you can get us on FM 107.9. So there's no excuse not to find us. You can find us on the radio. You can find us on the internet. You can find us on the phone. And you can find us worldwide. We're not just Broward County. We are located in Broward County, but we are international. So thank you for joining us on Waves 1170. This is Financial Literacy with Hubert McIntosh, your CPA, every Sunday night, 9 to 10. All right, let's go to the second bracket now we mentioned. So 0 to 9,525 is 10%. 9,525 to 38,000 is 12%. And don't miss this next one. 38,700 to 82,500 is 22%. So what I want to bring to your attention there. So between 38,700 and 82,500, the tax bracket jumps from 12% to 22%. Wow. That's a jump of 10% there. So what it is saying that 38,700, you're going to be paying 12% in tax. And any amount over that, up to 82,500, you're going to pay 22%. And these are the kind of things where I talk to you about tax planning. Because what if your income was going to be 45, 50,000, whatever the case may be, and you can plan your income to be below 39,000. Do you see how powerful that is? Because you're going to be saving 10% in tax. And let's bring that into perspective. If you take a $50,000 income and you can take 12,000 off that, you can take 12,000. You have different strategies that we can help you with. You can take 12,000 off that and you bring it to 38,000. You have just saved, because that's a $12,000 difference. And that was going to be taxed at 22%. 22%. So think of that. That 12,000 was going to be taxed at 22%. And because you managed to bring it down to under 39,000, it's taxed at 12%. This is why I keep emphasizing to you about tax planning. And a lot of times you may think, well, my situation does not require tax planning. There are many ways. You know, you have 401ks, you have IRAs, you have different strategies to help minimize that. So the importance of tax planning. So that's tax rate. Not going to be tax rate today. The next most important one, and it might even be more important than the tax rate, is the filing strategy. So what's the filing strategy? If you're a single person, the filing strategies have three categories in that sense. Not three, four. You have single, that's self-explanatory, right? Single, if you're single, you're single. So you have that single where the standard deduction is $12,000 for a single person. Then you have married filing jointly. Not married filing separately. Married filing jointly, the standard deduction is $24,000. That's double married filing jointly. And then the next major category there is head of household. Head of household is a $18,000 standard deduction. So what's head of household? Head of household is that you, the taxpayer, must have a dependent. Yeah, you must have a dependent. You cannot, as part of the, you can say, well, you're the head of your household. But according to the IRS, you are not head of household unless you have a dependent. I want to clear that up because you'll be surprised how many people come into the office and they say, well, I'm the head of my household. Yeah, that's you. You can say all you want. You're the head of your household. But that's not the definition for the IRS. The IRS says head of household is where you have a dependent. So what's a dependent? That's another confusion again. A dependent. One of the main measuring tool of a person being your dependent, there are 5 different categories. But the major one, if you don't cover this one, you're not gonna pass any of the other 4 tests. The number 1 test for head of household, you have to be providing more than 50% of the dependent support. Yes. So this qualification a lot of times is easy if it's a child, but when it's an adult, no, that's a different story. And we will get into that because that can be a little bit complicated. But use this measuring stick. 50% of the dependent expense. A lot of times, someone will claim their parents as a dependent, but you got to remember you can claim your parent. But here's the measuring: you have to provide 50% of the person's support. So say mom, and I'll just quickly go through this and we'll pick this up back next week because time is up on us. Say mom is getting $1,000 a month for Social Security. Mom income is $12,000 by Social Security. For you to claim mom as a dependent, you have to be providing more than $12,000. Because if $12,000, so in other words, mom expense would be $24,000. So we know that can be confusing. We'll pick this up next week. I just want to thank you. This is Hubert McIntosh, your CPA, a member of SOFR. We're on every Sunday night, 9 to 10 at Waves 1170. And remember, we are on the app and we are also streaming on FM 107.9. Thank you for joining us. Have a great evening and we will catch you next week.